Hi there, welcome to kneppyinvests and welcome to one of the busiest days of the trading calendar. The last trading day of April is fairly similar to the last trading day of January, July, and October. And why is it really busy today? It's only because the majority of companies that need to release are required to release their Appendix 4C or 5B. Wait to the last minute. Well, maybe not the last minute, but the last few days. So we see a plethora of these quarterly reports released today. And that really starts on the second last day before the month ends. So for instance, today we have seen 602 events released so far. This is at 3:27 p.m. Yesterday, 418 events. If we go back to last week, last Tuesday, there was about 140 events, if I remember correctly. Let's have a look. I could be completely, no, 143 events released, 144 on Monday, and the majority of those are not Appendix 4Cs. And if we go back 1 week earlier, only 99 events released on April the 19th. So just today, we've had 6 times the amount of price-sensitive announcements released compared to only 11 days ago. And I open up most of these Appendix 4Cs and 5Bs because even though the majority of these quarterly reports are absolutely rubbish, I am looking for those hidden gems. And to be honest with you, if I was a manager of a company that had a really good quarter, really good cash receipts, really good, or maybe moving towards operating cash flow positive, or did achieve operating cash flow positive, I would not release your quarterly report on the last 2 days of the month. I would release it on April the 15th or in the middle of the month. So more eyeballs are on your report. Today, your report might be hidden or missed among all the flux of announcements being released. Eventually, it might be picked up by me because I look at all of them, but I think a lot of people might miss those really good reports. And today we have seen a few good ones, but the majority of these reports are rubbish. And this is exactly what I do. So let's have a look at the last announcement, last Appendix 4C or 5B released today. It was a company called MEC Resources with a ticker code MMR. I have never heard of this company before. So let's open up this Appendix 4C. It's a 4C, even though it says resources, which is weird. So what does this company do? And I don't care what they do. So what I usually do is I skip all of the commentary. I go straight to the most important thing, which is Section 1 of the Appendix 4C. And this company has no receipts. In fact, they only spent $28,000 in administration and corporate costs. This is a rubbish company. So I move on to the next one. And that's exactly what I do. I typically open up these announcements in batches because ComSec sometimes takes a while to open up the bigger ones. For instance, here's one with 29 pages long. Sometimes you see as much as 44 pages long. Thank you, Patriot Lithium. So let's open up this. And you might see, you might have to wait a little bit of time. Yeah, that's too long for me. And then you can just scroll all the way down, all the way to the bottom, page 40. Patriot Lithium has no receipts. And then I move on to the next one. So it does take a fair bit of time to go do all this. And about 5 years ago, I was only doing Appendix 4Cs, and then I transitioned doing Appendix 4Cs and 5Bs. So this is the busiest day of, or one of the busiest days of the year for me. There's only 4 of them in a year. I can handle that. And typically I like this month just because we can see how these small companies, small cap companies are doing. Okay, so that is my day. Now, the agenda for today's video is I am going to go through top 10 announcements of the day. So I've increased it from the top 5 to top 10. Majority of these top announcements of the day were not Appendix 4Cs or 5Bs. A few in there. There were a few, and a few did miss out. So I did have to cut out quite a few. And I'll talk about those companies that did not quite make it in the top 10 announcements. And then before that, before we have a look at the announcements of the day, I'll go through what has happened on the ASX. Current time is 3:30 p.m. So I've got to get a bit of a move on. I want to finish this video by 4 p.m. So I've got 30 minutes to do it. And then if I have a bit of time, I might have a look at some charts. Cocoa futures down 15%. So hopefully chocolate is going to fall in price. It won't. Lithium's had a pretty good day according to this, and so has iron ore. Iron ore up 4.96%. What's going on with an iron ore? Interesting. Anyway, let's start the day, or this video, apart from the intro, looking at what's happened on the ASX today. It's an okay day. ASX 200 up 2%. Not 2%. That would have been an awesome day. ASX 200, or the XJO, up 0.22%. 2 for 22. Or Ours is also up 0.22%. Small caps down a little bit. Tech down, well, virtually flat, and resources have a pretty good day. So let's have a quick look at the sectors and indices. Discretionary, good day. Materials, good day. Most sectors are actually up, apart from industrials and utilities, both down a little bit. Energy flat, IT flat. And indices, ASX 200, the best performing index today, up 0.48%. Gold, though, is down at 0.54%. So gold has not had a good day. Let's have a look at the ASX 20. Just a quick look at the best performing companies, big companies on the ASX. And we've had 5 down, 15 up. And the worst performing ASX 20 company is Transurban, a company I will never own. QBE Insurance, I might trade QBE Insurance. Woolworths is down, which is interesting. Macquarie down, Rio Tinto. But the best performing ASX 20 is Fortescue, which is understandable because I know had a good day. So Fortescue up, Wesfarmers, Goodman Group, CSL. So quite a few companies I own here. So of the top 6 performing companies, I own, actually top 7, I own 5 of them. So I actually do own quite a few of the ASX 20. Aristocrat, WiseTech, REA Group, CSL, and Goodman Group. And I think nothing else. Yeah, nothing else. There you go. So actually a pretty good day on the ASX. Okay day. We'll call it an okay day. Not a really good day. Okay day. Not as good as yesterday. We'll just say an okay day. I think it was an okay day on the American markets as well. Okay day. Okay. So let's have a look at the top 10 announcements of the day. Now, honorable mentions, that's what I might call it. Honorable mentions that did not quite make it in the top 10 include Aroa Biosurgery. And what I'll do is just have a look at how the share price has performed today. Up 3.1%. The company did release their Appendix 4C, and I actually did like it. I thought it was good, and it looks like the market did agree with me. So unfortunately, it was not as good enough to get in the top 10 announcements of the day, but it did get close. Independence Group had or released their quarterly report, up 5.5%. I thought some of that might be because lithium had a pretty good day. And IGO's chart is starting to look pretty good. In fact, what I might do is also have a look at the charts for all these companies that did not quite make it in the top 10. So IGO, I think, have found a bottom, possibly. Well, just decrease the size of me. So maybe has found a bottom. Not quite calling a turnaround for IGO. And I say the same thing about Aroa. Share price probably still in the downtrend. Yes, Aroa still in the downtrend. I do like the future of this company, but there is a lot of negative sentiment in Aroa Biosurgery right now. The share price has more than halved since the highs we saw back in early 2023. Pentanet did not quite make it, very close to becoming operating cash flow, free cash flow positive. A share price has not moved. Were they operating cash flow positive and not free cash flow? Yes. Oh, no, that's right. So operating cash flow positive by $19,000, but they did get $33,000 in government grants and tax incentives. So not quite hitting that inflection point just yet, but getting close. Pentanet. And the chart says, after a nice little rally, when they announced some sort of partnership with NVIDIA, or NVIDIA, I should say, share price has dived and is now at the lowest point. Possible support at these levels. There's the low I'll get rid of the paper, back in October last year. And yeah, the share price has moved back to those lows. So maybe now is the time to think about buying some shares in Pentanet because it is getting close to that inflection point. Syrah Resources, up 2.35%. They released their quarterly report. Still really negative in terms of cash flow, but the market probably expected that. And the share price still in a downtrend, I would assume. I'm assuming a lot here. Yes, share price still in a downtrend, but maybe trying to level off and consolidate at these levels. This is definitely a company I want to keep on following just to see if they can turn things around in the cash flow of the business. So Graphite. Another company that didn't quite make it onto the list was BirdDog Technology. I did see the share price of this company up a lot, 20.3%. Now, I did have a look at their Appendix 4C because they released their Appendix 4C and have a look at all these reports. And I didn't come away thinking this was amazing. So receipts of customers 5.1 million, operating cash flow negative 215,000, but maybe that's an improvement from previous quarters. I know significant growth in receipts, but the markets liked it. But maybe it's just based off low volume. I don't know. So let's have a look. BirdDog Technology. Yeah, nothing to get really exciting with this company just yet. No big volume coming in. So move on to the next one. Even though share price up a fair bit, I think it's on low volume. So I don't get excited in those situations. Aeris Resources, I have a feeling the share price is down here, 13.6%. They released their quarterly activity report. The market didn't like it. I had a quick glance at it, and I came away from it not liking it either. So I'm not shocked by the market reaction. And share price has been on a really good rally recently for Aeris, and this is sort of like, yeah, I know. They mostly mine copper, and copper was down a little bit, but nothing. Oh, look, copper looks beautiful, doesn't it? But nothing to really explain this drop in the share price. So more than likely, Aeris Resources share price fell based off their quarterly activity report and maybe the cash flow, that stuff like that. But it wasn't good, wasn't great, and pretty high volume coming in. So the market did not like this report from Aeris Resources. And Zip did not quite make it into my list. They did release their Appendix 4C, and the market is ho-hum about it. So let's move on to the next one. Don't have to really look at the chart. Chart's still looking okay, but nothing too great right now. It all depends on your time frame. So let's have a look at the chart, I suppose. Let's have a look at the chart. So it all depends on your time frame. There has been a little bit of pullback, but maybe this is just by the dip occasion. And there has been a little bit of a rally in the last 5 or 6 trading days. But I'm maintaining a small position in this company, which is my profits from a trading position. And I have no idea which way the share price is going to go from here. No idea. Could look at the hourly chart. So I'm looking at the hourly chart more and more. And when you look at the hourly chart, again, this gives me no indication which way the share price is going to go. Maybe short-term uptrend, but no idea at this point in time. And Zip's Appendix 4C didn't really give me any insight into how the company is really performing, to be honest with you. Clean Tech Water. I don't know much about this company, except they might have something to do with water and clean water. Market likes this particular Appendix 4C. I liked it as well. I did write it down as one to keep an eye on. I have done no research on this company, and of course, Appendix or ComSec is going to take a massive amount of time to open this quarterly report up. And this is why I open up these Appendix 4Cs and 5Es in batches, because it takes the same amount of time to open 5 or 6 reports as it takes to open one sometimes. That's right. Anyway, so let's have a look at the quarterly report. So this company had receipts of customers 4.8 million and was operating cash flow positive 1.7 million. However, $820,000 in government grants and tax incentives. Take that away, the company was still operating cash flow positive. So I have a closer look at this company moving forward, and the market likes it. So let's have a look at the chart for Clean Tech. And nothing. Now, I have no interest in this chart just now. So the Appendix 4C looks good, but the chart looks meh. Droneshield announced today something interesting. They are closing the SEPP early due to excessive demand. I think it's at the end of the week. And because it's oversubscribed, if you are applying for a certain amount of shares, more than likely you won't get that certain amount of shares. So share price of Droneshield has rallied on this past 80 cents. That's the important level. So if you could take part in this capital raising at 80 cents, I think I would do it. I have a feeling share price might go on a bit of a run after the SPP closes. That's just my feelings at this point in time. And Big River Industries did not quite make it onto my list. They did have a trading update, and it looked negative, really negative. So a little bit surprised the share price is not down as much. And it did go to as low as $1.62. So an interesting one-day candlestick. But this sounded negative. They talked about challenging market conditions foreshadowed in the first half have continued into the third quarter. Now, so there was a bit of negativity in there in the commentary, but there was also some positivity in here as well, because they say here down the bottom, well positioned to take advantage of expected improved market conditions in the medium term. Now, in saying all that, possibly the bottom is nearing for Big River, because when you look at the chart, the share price has been in a well-defined downtrend, and maybe that downtrend is coming to an end. Market cap 143 million. P ratio 8.9, dividend yield 8.14. So if this is a bottom, and you don't see much of a decline in profits, that sort of thing, revenue, maybe now is a good time to think about buying big river industries. Let's have a look at the weekly chart. Yeah. But otherwise, I don't know much about this company. Anyway, let's go to the top 10 announcements of the week. And then when I finish, because I forgot to do it, I'll have a look at the stock scans, top gainers and top losers, just to see if I've missed any companies that did perform well or not perform well today. So coming in at number 10. So I haven't mentioned the list of top 10 companies, so maybe this will be a surprise. Coming in at number 10, we have Ampol. I have been a little bit of a critic on petrol companies, including Ampol, because I think instead of supermarkets, us paying attention to supermarkets and then price gouging, I was thinking, what about petrol stations? Well, I think Ampol gave us a clue that maybe they're not performing as well as we expected as they release a trading update today. And you can see the share price down 3.4%, which might not seem a lot, but for this type of company, it is a lot. Now, the main thing I saw here was LRM, which is light and refiner margin, down a fair bit from $14.90 a barrel. BBL, I'm pretty sure that's barrel, something to do with barrel, down to $11.80. So margins have dropped. Production has dropped. A lot of negative numbers here. And so maybe I thought these petrol stations might be price gouging. And I think maybe not. Maybe their margins are, or maybe their costs are quite high and they're just not increasing, but they're putting those increased costs into the petrol price we have to pay. So apologies, Ampol. Apologies, other petrol stations, maybe not doing as best as we expected. And I'm pretty sure the margins, I did read something that Jeffries or someone had an expectations for the margins, and the margins were lower than expectations. And that's another reason why the share price has dropped, because the results were worse than expected, or the update was worse than expected. Now, let's have a look at the chart for Ampol. Now, the share price had been an uptrend. Yeah. So there has been a fair bit of a dip in the last few weeks since the start of April. Share price has fallen from $42 to $36.80. Is this a buy the dip situation for Ampol? I'll leave that to you. I'm not convinced. Dividend yield of 7.15%, price earnings ratio of 16.6, according to TradingView. Let's have a look at the weekly chart. And if you look at the weekly chart, nothing much happening since 2015. Virtually flat. Yes, this is not the sort of company I would be interested at all. But if you took part in this little bit of a trend here, uptrend here, bought at say $30, you could have sold out at 33% profit if you timed it right. So coming in number 10, we have Ampol with a negative trading update. Coming in at number 9, we have another big company on the ASX, Coles Group. Only down 0.5%, but they released their third quarter sales results. Now, you'd think with high inflation, volumes or sales volumes should be up a fair bit, and they were for Coles. So that's the main thing you have to remember for these type of companies. In inflationary times, volume of sales, not volume sales, sales should increase. I think more important looking at volume, but sales have increased in the supermarkets by 5.1%, down 1.9% in liquor, which might be a little bit of a concern. So the main thing here is you have to compare this to inflation. And they did provide us with a really interesting table here. So sales revenue for supermarkets, but they've also included inflation for the third quarter of 24 and the third quarter of 23. And so we can compare the sales growth to inflation. So they actually did okay. Sales growth of 6.6%, inflation 2.2%, excluding tobacco 1.9%. Now, one of the reasons why maybe sales also increased was because of increased immigration as well. So really, the sales of Coles should equal inflation plus population growth. You're not going to see much increase in volume over inflation or volume increases compared to immigration. Put it this way. So this is the sort of company I would not be interested in because you're not going to see much growth over inflation and population growth. But anyway, share price down 0.5%. Let's have a look at the chart. For Coles, and I'll call this, Yeah, I'd say They had a good release in February. The half-year report was good, but the share price actually has gone down from there. This is not the chart I would be excited in. Look at the weekly chart. Yeah, it's doing nothing over the last 3 years at all. Going sideways, really. If the share price fell to, say, $13 to $12, I might be interested because the company has a markup, not a markup, a PE ratio of 20.5, which is ridiculously high for a company like this, which is not going to grow all that much. When I say all that much, I'm talking about profits. Will not beat inflation by all that much. And I'd rather pay a PE ratio of just over 20 for Alphabet. Yes, Alphabet has almost the same PE ratio. I could be a little bit wrong with this. Alphabet has almost the same PE ratio as Coles. Which one's going to grow in the future? It's going to be Alphabet over Coles. I understand Coles might be considered defensive. I don't care about offensive at all. I want capital growth. Anyway, that's Coles. Coming in number 9. Coming in at number 8, we have an Appendix 4C, Knosys, which is a SaaS company. Up 21.21%. The market has liked it. I like this as well. Okay, so this is a SaaS company. SaaS what? I don't know. So if you don't know what SaaS is, software as a service. And I had a look at this and I went, ooh, this is definitely one to put on your watch list, I think. Okay, so SaaS, let's have a look at the About section. Leading SaaS provider headquartered in Melbourne, I don't care where they're headquartered, with operations internationally providing specialist expertise in helping businesses manage information and knowledge. Okay, connecting people and information. So something about information, businesses, that sort of thing. Okay, so let's have a look at the most important thing. Cash flow from operations, receipts up to 2.862 million. It probably would have grown a little bit from last quarter, maybe not as much. But the company was operating cash flow positive $507,000, $1.2 million for the first 9 months. The other thing to pay attention to is they have no intellectual property. So research and development is in section 1, which means some companies, they capitalize research and development, and you see that into intellectual property. They could have done that, and the operating cash flow would have been more, would have been like $750,000. Now, this company is not big. I was surprised how small this company is. Knosys, I think about 20 million, I'm guessing. No, it's completely up. 8.65 million. That makes this company even more attractive. Okay, so Knosys, definitely one to put on your watch list because they are operating cash flow positive. Now, I haven't looked at the growth of this company in terms of cash receipts. That's the next thing I'm going to do after this video. I'm going to have a closer look at Knosys, particularly with that market cap. Do they have any debt? I'm hoping they don't have no debt. A little bit of debt, 221,000, but that's okay. Okay, so the next thing is the chart. What's the chart looking like? I have a feeling not so flash. This is the weekly chart. But even though I'm saying not so flash, look at the volume coming in the last 4 or 5 months. Some really good volume coming in. And the share price really hasn't moved. And there is a saying, and I've heard this a few times now, that volume sometimes precedes price action. So it seems like someone is taking a position in this company. Maybe many people are taking a position. Maybe some fund managers are taking a position in this company, which would be surprising because of the markup. Look at the weekly chart. We have seen some large volume weeks. But this is starting to look interesting. A potential play, Knosys. I'm pretty sure it's pronounced Knosys because K is usually silent. I should know because of my last name. K is usually silent, but German people would say no. Well, in German, K is not silent. Knosys, like my last name, would be Knepp, and I make fun of people who say that Knepp. And usually when someone says, "Oh, is your last name Knepp?" I say, "Yeah, just like knife and knee and knob." Anyway, and then German people say, "Well, but in German, it is pronounced." Stop it. All right, so coming in number 8, we have Knosys or Knosys. Coming in number 7, we have Metro Mining. You'll notice the share price has done nothing today. So why is this on the list? 2 things. Company released an interesting announcement yesterday, and the market liked it. Share price up 6.98%. Company released their Appendix 5B today, and the company went into trading halt to do a capital raising. Now, what was interesting is they did this capital raising on the day they released the worst Appendix 5B they were released in the year because this company is seasonal. They have operations just north of Weipa in Queensland. They shut down operations for maybe 2 months a year during the wet season because it does get quite wet up there. And usually the March quarter is bad. And you can see that just in there, Appendix 4 or 5B. So receipts to customers 9.6 million, and they were operating cash flow negative by 17.9 million. So you might look at this and go, oh, this is horrible. And sometimes you might see the market react, oh, this is terrible. The company is not performing. And usually it's just ignorant people thinking that. Because if we go back and have a look at their most recent, the one before this, the December quarter Appendix 5B, which you'll see in, I'll have to go back 1 year. Jeez, 1 year. Let's have a look at this particular Appendix 5B. It was pretty good. And it takes a while to open up. So let's have a look at that. So this particular quarter, almost $90 million of receipts, and the company was operating cash flow positive by 6.8 million. However, property, plant, and equipment, 5.4 million, and exploration and valuation, 174,000. So only free cash flow positive by about $1 million. And I was intrigued to see they were doing a couple of raisings. So let's have a look at the cash on hand. So where is it? Cash on hand is... So cash on hand at the end of the period, 2.8 million. And now they're doing a couple of raising. And they do have a fair bit of debt as well, $103.7 million of debt. So there are a few things I don't like about this company. However, the market disagrees with me. The market has been liking this company. You can just see that by the chart. Share price has been on a really nice uptrend since the start of 2024. Share price has increased from 2 cents to 4.6 cents. Now, it's going to be interesting to see what this capital raising is for, or what price is it set. If it's like at 4 cents, yeah, 4 cents, I could see 4 cents. It might be okay. So that is Metro Mining. You can also see a really good increase in volume as well. So the market is getting set when it comes to this company, Metro Mining. Not my favorite company, and there are things I don't like about it, but just because I don't like it doesn't mean you don't have to like it. Okay, so coming in number 7, we have Metro Mining. Coming in number 6, we have VMoto. Share price down 15.4% on the back of a market update and financial year 24 guidance. So whenever a company releases any sort of guidance or market update, trading update, and share price either increases or decreases a lot, it's going to be featuring in my top announcements of the day. Not a company I like at all. I don't like this sort of company. They manufacture and sell motorbikes. Maybe they do a little bit more than that. And they used to primarily sell them in China. So I'd probably say maybe low quality motorbikes, but I have a feeling they've been selling them in Europe recently. You just see, I don't know a lot about this company. Global electric vehicle company. So maybe they're more than just motorcycles. Let's see the about section, see if they go into a little more. I can see a lot of motorcycles here. So I would say primarily motorcycles. What's the other thing they call motorcycles? Scooters, maybe scooters as well. And I can just see motorcycles here. So they don't really have an about section here. Anyway, so I just looked at this first few highlights and I went, okay, production down 54%, negative operating cash flow due to lower than expected sales orders, international unit sales of 2,860. So in the first 3 highlights, I knew this was going to be met with, I won't say derision by the market, but the market would not like this. VMoto conducted a rebranding initiative to unify Emax, Super Serko, and VMoto brands. And they've got a total sales. So quite lumpy and no increase in sales. I'd like to see a bit of an increase in sales. So they do sell most of their motorcycles now internationally, not in China. So that has really turned around. And I probably looked at this company maybe 8 years ago. So back then, I'm pretty sure they were selling most of the motorcycles in China. So let's have a look at the chart for VMoto. And, the chart looks ugly. This is an ugly looking chart. Do I have this company on my watch list? I have it in February 24 results and I have not looked at it. Okay, so otherwise this company is in no other watch list. I probably should put it in, I'm going to put it in transport, travel and leisure. So this is an ugly chart. Share price has dropped from 42 cents down to 11 cents in the past 2 years. Ugly looking chart. No reason to get excited about this company now. Markup 50.65 million. Yes, no. So coming in at number 6, we have VMoto. Coming in number 5, we have Clarity Pharmaceuticals. Share price up 10%, I'm assuming. 8.98%, $2.79. They released their Appendix 4C today, but I don't care about that because they will have 0 receipts. I'm assuming they have 0 receipts. But that's not the reason why the share price rallied today, because they released that Appendix 4C at 3.37p, so 20 minutes ago. And in fact, when they released their Appendix 4C, the shares in this company would be halted for like 15 minutes. You can see that just by looking at the cause of sales. And yeah, 355. And you'll see a massive gap. Here we go, 333. They released it, 336, and then there's a 12-minute gap because they released Appendix 4C. Shares are traded because of market-sensitive announcement, and shares are traded again. And share price actually did drop just on the release of that. So someone didn't like it, but when we look at the Appendix 4C, which is still opening up, can you believe it? And that's ComSec for you. Still opening, still opening. Get there, you can do it, you can do it. There we go. So if we go to, I'm not even sure why I'm showing you this because it's going to 0. There it is, 0 receipts. Burning through a lot of cash, 12.2 million, but that's okay. And this is a story stock. But the reason why the market reacted really well to Clarity Pharmaceuticals is because of this particular announcement. A lot of this went over my head, but complete response in first patient ever treated with 2 doses of their CU67 SAR Biz PSMA, and it sounded good. Now, I am not an expert in analyzing this sort of announcement, but it sounded good. Talking about no adverse effects, no dose limiting toxicities, blah, 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 no detectable lesions. Yeah, so it sounded really good, and the market has liked it. Now, the share price of Clarity Pharmaceuticals has been under a little pressure recently. I noticed this. I was thinking of taking a position in this company, but if you look at the 1 hourly chart, it was showing a little bit of stress, sort of trying to turn over, a beautiful uptrend in the 1 hour chart, trying to turn over. Maybe the announcement today has a bit of stop this potential downtrend. Some good volume coming through today as well. Some pretty good volume coming through. Highest volume we have seen since December of last year. So definitely a company I will follow and continue to follow for many years, even though I may never be a shareholder in this company. So that's Clarity Pharmaceuticals coming in number 5. Coming in number 4, we have Serko. Serko share price, I'm going to try to guess. Serko up 15%. 18.9%. I thought, yeah, there would be a good reaction to announcement this company released today. Serko signs 5-year partnership renewal with Booking.com. I don't really have to open this announcement up. Now, if we go to the chart, they originally announced this partnership with Booking many years ago. Was it here? It wasn't May 2023. I have a feeling it was 2019. I have a feeling it was here. The 25th of October 2019, share price on this day rallied 44.9%. Let's confirm that it was that day, 25th of October 2019. Serko, we can confirm that just by looking at this page, market index, going back to, wish there was a little search. Twenty-fifth of Whoops, I'm going the wrong way. Okay, Booking.com agreement and investment and capital raise announced on the 24th of October. They must have gone into a trading halt because of capital raising. And when they went back to trading on the 25th of October, that's when the share price increased 44%. So that was 5 years ago, and they've renewed it for another 5 years. The market has liked it. Now, in saying all that, the share price was under a little bit of pressure there was a beautiful uptrend, and the share price was rolling over, and looks like this downtrend or burgeoning downtrend maybe has come to an end on today's announcement, but there's still a lot of resistance moving forward for the share price of this company because many shareholders bought at higher prices in the past year. The share price has been higher than this for the last 8 or 9 months, maybe even 10 months. So a little bit of resistance moving forward for Serko, and not big volume coming in. So I'd say today has been fairly weak, even though share price is up 18%, weak because of the volume. I would prefer higher volume. So overall, pretty good day for Serko. Nice announcement, but I would like to see, or prefer to see, a little bit more strength, particularly in the volume. And it's not the company's fault that the share price has been moving down or in uptrend, but that's what it is. That's the mentality of shareholders. If the share price drops after they bought, they think the company is a dog stock and they just have to get out. A sad mentality to have. So that comes in at number 4 is Serko. So if I had to reorder this, I'll probably put Serko down a little bit more on the list. Coming in number 3, we have Worley. Now, I did actually see this company in the worst performing companies. I actually did go through the best and worst performers in the day, and this was one of the worst performing companies. Like, why is Worley doing so badly today? And then, of course, there was a non-price sensitive announcement released at 10:08 a.m. This is definitely price sensitive. So Syrah, formerly Dar Group, sold some shares in this company. You might say, well, so what? Just based off the reaction of the market, down 7.2%. Share price opened up actually at $14.60. So the share price opened down probably about, we'll say over 10% down. Okay, so this is used to be a fairly big shareholder in Worley. Did they sell all their shares? So Worley understands that Syrah has undertaken a sale of an interest of approximately 19% in Worley by way of an underwritten block trade executed this morning. Okay, so you can actually see this block trade just by going to course of sales. Yes, you can do this yourself. And let's go all the way to the start of the day. And you can see the block trade just here. There it is. At 7:40 a.m., this Syrah, what are they called, sold 50 million shares in 2 blocks. So 100 million shares of this company. And that equates to a value of about $1.5 billion. Yes, $1.5 billion at $14.35. And that freaks out the market. Totally freaks out the market. They think, wow, if they're getting out, something must be wrong with the company. Maybe they just need the money. Maybe they're doing another purchase, or maybe they're going broke. Who knows what's happening with Syrah? But they're probably sold for a reason, and someone would have had to buy all those shares too. Did they say who bought them? I have no idea. You never see who bought them, do you? Who bought them? Anyway, so that's why the share price of Worley did go into a bit of funk today, because their biggest shareholder, one of the biggest shareholders maybe, sold some shares. Let's have a look at the chart for Worley. And going back down to the lows we saw back in February. And the chart looks meh. And I think this company just looks meh. This is the weekly chart. Meh. No, there's not a sign of a good quality company. It does trend at times, and does look like this is in a weekly trend at the moment, but a little bit of pressure right now on the share price because of the sale. But not a company I do follow that closely at all. And the only reason I'd probably own this company is just for a trend, a short-term trend, or short to medium-term trade, I should say. So coming in number 3, we have Worley, because someone sold $1.5 billion worth of shares, and the market didn't like it. Shareholders thought something's going wrong with the company. Coming in number 2, and the top 2 companies, I had to put them in number 1 and number 2 because I sent 2 tweets out today, and these are the 2 tweets I sent. And maybe this company should have come in number 1, because I do own this company, and they released their Appendix 4C, and it's fairly bullish. Hopefully the share price is up about between 5 and 10%. Or 11%. Oh, 11%. Oh, okay. So share price up 11%, and this is a trade I made. A few reasons. Firstly, based off the chart, and then a few announcements the company did release. And the thematic behind this trade is playing off perfectly. So I was thinking maybe there's a bit of a turnaround. They released a really good announcement in terms of they were selling something, one of the low one of the low margin businesses of the company, and I think there is potential. This is a really good turnaround story playing out, and I think maybe they've confirmed that today. So let's open up their Appendix 4C, and possibly I should do a standalone video on this. It's probably worthy. Now, I'm been a little bit biased because I have taken a position. So Metarock. So if you don't know what a company does, you just go to the About section. Something to do with coal. I wouldn't say drilling. You can see sometimes I make trades on companies I have no idea what they do. So mining services company, we'll put it that. We'll say that. I have no About section. Oh, I wish every single company would have an About section at the end of their announcement. No About section there. We could go to Market Index. They should have an About section. I thought this company has something to do with coal, maybe drilling, mastermind, coal mining contractor. Yeah. Company is providing contracting services to the underground longwall mining operations. There we go. Yeah, something to do with coal mining services. I knew mining services, coal, thought maybe drilling, but yeah. Anyway, the most important thing about this is, so the first thing I always do when I open up Appendix 4C is I have a look at the Section 1. Receipts of customers, 134.4 million in the quarter. Okay, so this company has low margins. That's the first thing you have to know. So that's a lot of receipts in one quarter. But operating cash flow positive, $19 million in a quarter. Now let's go back to this market index. Company has a market cap of 73.6 million. So this is another reason why I became interested in this company, is just potential real deep value. Just potential real deep value. But I had to really see that. And this is the first quarter when I've gone, interesting. Because you see the year to date, $384 million of receipts, but operating cash flow positive by only 6.2 million. And I saw that when I had a look at this company before I took this trading position. I went, I don't like that. But this quarter, I'm like, whoa, this is starting to look a little bit more juicy. The very fact they had or created $19.3 million in operating cash flow, and they didn't spend much money in capital expenditure, $2.9 million in the payment or the acquisition of an entity. So a lot, and I think they dispose of a business as well. So a lot of this operating cash flow has fallen to the bottom line in a way. But the company does have debt, and they repaid $13.7 million of debt, which is something else I really, really like. So at the end of the quarter, this company has $50.8 million of debt. Okay, so to decrease the debt, cash on hand is $7.4 million. So they have about $43 million of debt, which means enterprise value of this company is about $110 million, which I will take for a company that generated $19 million in operating cash flow. Now, it does not mean they're going to continue performing like this in future quarters, because they did mention there are some reasons why this particular quarter was quite good in their terms of their operating cash flow. For instance, versus as a result of the good performance. So that's okay. That's what we want. Combined with the unwinding of timing differences in working capital investment and nil ATO plan repayments. So there were reasons behind why this quarter was good, but the very fact that good performance was a reason fills me with glee. Another reason I like this company is because I sold that business at an enterprise value of $65 million with estimated net proceeds of $36.3 million. So if you include that into the valuation of the company, that means the company has an enterprise value of, say, $80 million, which again, based off the operating cash flow and the free cash flow in this one quarter, I like it. I think this was a good quarter. Now, I want to see this momentum continuing into the next few quarters, and I'll take a closer look at some of the commentary because it is a fairly detailed commentary. Not that detailed, but yeah, a good quarter. Now let's have a look at the whole reason why this company got onto my radar. It's the chart. That's all it was. It wasn't the weekly chart, because if you look at the weekly chart, ugly, although you can see back in 2016, share price fell to about 10 cents, and it fell to 10 cents recently. But if you look at the daily chart, this is showing the telltale signs of a turnaround. Share price basing on 10 cents, wasn't getting any lower, consolidating, moving sideways, and then we have seen a rally in the share price, some good volume coming through, and now the share price is higher. According to TradingView, it's 24 cents. So let's have a look. Share price has closed at 25 cents. So 24 cents, yeah. So that 24 cents in trading view is that's 20 minutes delayed. So share price has closed at 25 cents, which means the share price is at a 16-month high. So what I look for in turnarounds, not turnaround stories, but breakouts. This is a breakout or potential breakout. So what I look for is positive financial information or positive financial event. Yes, tick. Share price at least a 6-month high. Tick, 16-month high. High volume. I want to see high volume. Now, today there hasn't been exceedingly high volume, but higher than average volume when you look at the moving average of the volume over the past, I think it's like 30 days or so. It is higher than average volume, which is good. And that includes these spikes in volume, which sometimes can be because of cross trades, that sort of thing. So coming in number 2, we have Metarock. A nice little trade I have put in place recently. Coming in number 2 is Bapcor. You'll notice the share price is not down, but I did tweet this. A really interesting group of announcements, maybe not group, a really interesting dual announcements released by the company today, and I think bad times are in store for this company when they go back to trading. Why do I think that? I could be completely wrong, but why do I think that? Let's have a look at the 2 announcements Bapcor released today that has me feeling fairly negative about this company and just being thankful I don't own shares in this company. So, the first announcement, the title doesn't sound that intriguing. Mark Bernhard to continue as interim CEO and MD. Now, the only reason you might take a bit of an interest with that announcement is the understanding that there was going to be a new CEO coming in place on May the 1st, which is tomorrow. So what's happened there? And then they went to a trading halt 10 minutes later. So let's have a look at the first announcement, and then we'll have a look at the trading update. And the trading halt is the most interesting thing, and I sort of gave it away by what I said then, sort of like a misuse of words. There is a word for that when you don't mean to say something and you say it anyway. Okay, so there was a new CEO by the name of Paul Dumbrell, who's supposed to be in his role from the 1st of May. So Bapcor announces that Paul Dumbrell will not be commencing as the group CEO and managing director as anticipated on the 1st of May 2024 for personal reasons. Now, those personal reasons could be really valid reasons. Maybe his wife's sick, or maybe he's sick and he just can't go into this role because he has other priorities, some higher priorities that he has to take care of. So maybe he was, cancer. I'm just thinking cancer right now. So that's what I thought when I saw this. Something bad has happened to Paul Dumbrell or his family member, a child, his parents, who knows. And then the chair says, this is a disappointing situation. However, we are pleased that Bach will remain acting the role. So that's the interim CEO. So I thought nothing much of it. And then the company went to trading halt. And I thought, this is interesting. Why are they going to a trading halt? And maybe this is the reason why Paul Dumbrell said, I don't want to be a CEO anymore. I just had a look at your trading update and went, no, I don't want any part of this. So the company has gone into a trading halt because they're going to release a trading update. Okay, so straight away, I think when a company has a positive trading update, they release it without going into trading halt. They release it on market straight away. And that's why I'm fairly bearish on this particular trading update. I think it's going to be pretty bad. Even when companies do release bad trading updates, they don't release it after a trading halt. They don't need a trading halt. So I have a feeling this is going to be a bad trading update from Bapcor, and I think the market already thinks that, and you can just see that by the buys and volumes. So there is quite a few sellers below $5.78 and not many above $5.78. So I think the market is already thinking this is going to be a bad trading update. So even though shares of Bapcor have not been traded today, I think just look out. And there should be, I think they said the trading halt should be lifted by Friday. Or was it Thursday? Let's have a look. Should be Thursday because that's 2 days from now. Yeah, Thursday, 2nd of May. Now, they can release it tomorrow. I was thinking they might even release it today, but have a look out for tomorrow. And if they don't release it tomorrow, they have to release it before trading begins on Thursday. If they don't, the shares in this company will be suspended. Potentially, Bapcor will recommend shares be suspended, and that would be weird. That would be odd if they do it. Okay, that's all I'm going to do. I'm not going to look at charts in today's video. I had enough look at. Actually, before I do that, let's have a look at Bapcor's chart, because I have a feeling the chart has started to look negative. Oh, yeah. There was a potential uptrend developing, and then all of a sudden the share price dove. Share price has fallen from $6.30 to $5.78 over the last few weeks. So it seems like possibly loose lips. Someone's been aware of the possible trading update, and people have been selling out. Not high volume, but just what's been happening the last 2 weeks has me thinking someone knew this could be coming. And of course, no one will pay any attention to that. Anyway, I'm talking about the officials, the ASIC. Well, they weren't paying attention. Who cares that there's insider trading? They don't care about that, seems like. Anyway, that's all I have for today's video. No charts because the video is going too long, in my opinion, 47 minutes. If you do have and I have to look at all these other Appendix 4Cs that have been released. Let's have a look. I'm going to update this. 609 events, now up to 656. So we're talking about 47 events released just in the last 47 minutes. One per minute. And the majority of these are Appendix 4Cs and 5Bs. Look at that. Appendix 4C, Appendix 4C, Appendix 4C, Appendix 5B, Appendix 4C, Appendix 4C. Quarterly activity report. Quarterly activities in cash flow report. Appendix 5B, Appendix 4C. Cash flow report. Appendix 4C. Cash flow report. Appendix 4C. All these are Appendix 4Cs and 5Bs. And the majority of these companies, when I have a look at the ticker codes, maybe one or two I'll be interested in having a closer look. Resolute Mining released their activities report. Zimplat's activities report. So nothing of massive interest for me that has been released recently since I last had a look. Anyway, that's all I have for this video. Have a good day, and I think my dogs want a treat because they usually get a treat at 4 p.m. It's now 4:18 p.m. So don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.